Hello and welcome to today's webinar, ESG Reporting and Auditing with AdaptiveGRC. My name is Łukasz Krzewicki and I'm an audit, risk and compliance expert at C&F. Today we have a special guest, our technology partner for our new environmental module. Please welcome Micha, the CEO of Forward Earth.
Thank you, Łukasz. Hello everyone, my name is Micha Schildmann and I am the founder and CEO of Forward Earth. I'm excited to introduce our environmental solution to all of you today. But first, back to Łukasz.
Let me tell you a few words about C&F. For over 20 years, C&F has been providing solutions to the largest international organizations. We develop advanced IT solutions specializing in big data services, advanced analytics, and governance, risk management, and compliance. Our team is responsible for AdaptiveGRC, an integrated platform that supports a wide range of GRC activities. We are currently adding a new ESG module that will help to manage ESG risks, support ESG metrics reporting, including carbon footprint, and conduct internal audits of ESG processes. We partner with Forward Earth, which powers our environmental module, which Micha will now introduce.
Thank you, Łukasz. At Forward Earth, we develop environmental management software that enables companies to report and manage their environmental impact. Our environmental management module can be integrated with our partner software, such as AdaptiveGRC, to provide environmental management capabilities to their customers. Today, we will show how the integration of our environmental module into AdaptiveGRC's software provides AdaptiveGRC customers with the ability to generate their environmental data for ESG reporting and auditing. Łukasz will give an overview of ESG risk management and reporting in the AdaptiveGRC solution. If you have any questions during the webinar, please feel free to ask them using the chat function.
Okay, let's start with a short ESG overview. ESG reporting has become increasingly important in recent years as companies recognize the need to address sustainability, social responsibility, and ethical practices. The EU is introducing the Corporate Sustainability Reporting Directive, CSRD, which will apply to large companies. The first companies subject to the CSRD will have to apply the new rules in the 2024 financial year for reports published in 2025. The new regulations require a shift in the mindset from viewing ESG criteria as external compliance requirements to recognizing them as integral components of long-term business success. AdaptiveGRC solution with our new carbon module powered by Forward Earth demonstrates how you can embed ESG criteria into the core business strategy and daily operations related to governance, risk management, and internal audit functions. Because internal audit's mission is to enhance and protect enterprise value by providing risk-based and objective assurance, advice, and insight, its involvement in ESG is of the greatest importance and a natural fit. However, internal audit's contribution to ESG efforts may be influenced by and dependent on the organization's ESG ambitions, strategy, programs, and reporting requirements. ESG risks, like any other business risk, can be detrimental to shareholder value. The cost of repairing the damage can be higher than preventive measures and proactive management. So ESG risks should be included in your risk management process like any other risk that may affect your organization's activities. Effective ESG risk management is a process that requires a solid understanding of the potential threats and opportunities these risks present. The first step in ESG risk management is to identify the potential risks that the company may face. This requires a thorough analysis of the environmental, social, and governance factors relevant to your industry and operations. These can include issues such as missing carbon reduction targets that affect an organization's carbon footprint, gender pay inequity, lack of anti-corruption and anti-bribery policies, and many others. Once risks are identified, the next step is to assess their significance and likelihood of occurrence. The AdaptiveGRC tool and its ability to manage a risk register and present your organization's ESG risk scores with a risk heat map can be used to measure and present your organization's exposure to these risks. After assessing the risks, the next step is to develop strategies to mitigate them. It is common to create policies and procedures that specifically address these risks and plan other actions that will reduce the impact or likelihood of each risk. Once risk mitigation strategies have been developed, the next step is to implement them and then monitor their effectiveness. Internal audit functions must act now to formally assess ESG risks that are material to an organization's performance, as well as the accuracy and completeness of ESG reporting. ESG reporting is not a simple exercise. It involves the collection and analysis of complex and sometimes vast data sets, made more difficult by the lack of a global formal framework outlining specific metrics and reporting requirements. Collecting comprehensive and accurate ESG data can be challenging. Establishing robust data collection processes and using specialized software can help streamline this step. By implementing measurable solutions, companies can demonstrate the impact of their ESG efforts with both quantitative and qualitative data. For example, you can start by focusing on metrics such as energy use, water management, greenhouse gas emissions, and safety performance data, including data from across your supply chain. Next, you can address social impacts such as community relations, workforce, and leadership diversity, and employee health and well-being. Scope 3 emissions are difficult in terms of calculation, reporting, and data verification. These emissions refer to indirect greenhouse gas emission associated with an organization's activities and supply chain. Specifically, Category 6 within Scope 3 covers business travel, emissions resulting from employee transportation for work-related purposes. These emissions arise from various modes of travel, including air travel, train travel, bus travel, and automobile travel. Now, let's explore how can you generate carbon footprint data with our new environmental module powered by Forward Earth. Micha, please show us all the details.
Thank you, Łukasz. After you choose to generate environmental data, you switch to the environmental module. As carbon data has the highest priority for many customers, we focus on that today. Here's an overview of how you as a company can measure your carbon emissions with AdaptiveGRC, powered by Forward Earth. We will go through these steps one by one before I show you the software in action. First, we start with the onboarding as a new user, which is supported by our AI. Then, we provide knowledge, again leveraging our AI chatbot. Next, you as a customer provide your input data, such as ERP or accounting data. And afterwards, our software automatically calculates the emissions leveraging AI. After the results are created, we provide the auditors with extensive documentation and workflows to reconcile the calculations. Lastly, we provide the data securely via API to the AdaptiveGRC ESG module for ESG reporting. So let's get started. You onboard seamlessly into the software and we set up the module based on the data already stored in AdaptiveGRC, such as company information, locations, etc. Then We provide guidance, knowledge documents, and instruction videos on how to get started even with no previous experience in carbon management. We also provide an AI-based chatbot that you can ask all relevant questions about carbon management, carbon regulation, or how the software works, and our AI provides you responses immediately. Then, the user can provide their data via uploads or integrations such as ERP, accounting, energy management, or invoice data. Our AI automatically processes this information and calculates the implied carbon emissions according to common standards. Our methodology is certified to the Greenhouse Gas Protocol by European auditing firm TÜV. We put a strong emphasis on following common standards and best practices to ensure that our customers can use the results without any doubt in their reporting. We furthermore provide several features to make it easy for internal and external auditors of our customers to verify the carbon calculations. This includes transparency on the variables of the calculation, as well as workflows to reconcile each individual calculation. Lastly, we transfer our data securely via API to AdaptiveGRC for further processing and filling the ESG reporting as well as the auditing process. Łukasz will now show how the auditing process is managed in the AdaptiveGRC main app.
Thank you, Micha. Due to new regulation and changing trends on the market, ESG reporting becomes as important as financial reporting. Thus, ESG reporting process must become one of the elements of the company's audit universe and must be included in strategic and annual audit planning. Internal audit functions are involved in one or more of the following ways: advising on the establishment of ESG program goals and metrics, reviewing how ESG goals and metrics are tracked and monitored, reviewing the implementation of the ESG program and related policy document, and reviewing the accuracy of ESG reporting to stakeholders. In organizations which are mature in their ESG journey, it is common for internal audit and internal controls functions to be involved in providing assurance over ESG data and controls. If we switch to the internal audit module in AdaptiveGRC, we will present you an example audit. That is an audit of the ESG reporting process. This specific audit is performed to verify the accuracy of the ESG reports provided to stakeholders. We can review the details of this audit. Let's have a look at the Preparation tab, which is filled in during audit preparation phase. During the audit preparation phase, the auditor prepares an audit program and plans the areas he or she wants to audit based on the risk score calculation. The audit program can also be downloaded from a template and can reflect requirements related to ESG reporting standards. In this example, the audit covers environmental factors such as environmental strategy, use of renewable energy, waste management, carbon footprint, scope 1 to 3, social factors like diversity and equal opportunities, non-discrimination, and governance factors, business ethics and corporate transparency. Scope 3 emissions data may be linked to emissions from purchased goods and services, fuels and energy-related emissions, capital goods or business travel, and any others. In the Fieldwork tab, we can access data collected during fieldwork phase with all the details, including findings that were identified during audit. ESG areas audited can be included in the report with all details. With just one click, the audit report of the ESG reporting process is generated. Recipients of the audit report can access the summary page with ratings per ESG areas audited. They can access also details regarding each area and all information that auditor filled in during audit. On the next pages, there are details regarding ESG findings identified. You can access also findings details per area, and furthermore, details with findings criticality levels. Also, each finding is presented separately with details from the system. We know already that many ESG metrics, such as carbon emissions or community impact, are difficult to quantify accurately. Auditors can be challenged to understand carbon footprint calculations. And in our example, auditor faced similar problem. Therefore, there should be a way to provide information on a basis that allows the auditor to reconcile the calculations. Another issue identified by the auditor during this ESG audit is missing some data from suppliers regarding carbon footprint. Auditor mentioned that there was an issue with low quality data or no data being reported by some suppliers. We can now have a look at the details of this finding. Micha, please explain how this can be addressed in our system.
Thank you, Łukasz. So let's assume the auditor now needs to understand the steps of the calculation to be able to reconcile a result with the input data. To allow the auditor to verify our results, we implemented several features, of which we highlight two in this webinar. First, we provide all information to be able to reconcile each result, including the input data source, emission factor source, emission factor year, emission factor geography. This way, the auditor can recalculate individual results to test the calculation logic or validate the emission factors used. Second, we provide a workflow that allows auditors to move along each step of the calculation from result to data entry to import the data, enabling them to trace relevant proof, e.g. invoices or notes left behind by other employees. This way, all information relevant for the auditor can be easily found. In the second use case, our auditor has identified that significant part of the calculation has low data quality and is incomplete. With AdaptiveGRC's carbon module powered by Forward Earth, you can resolve this issue easily. First, as you have seen earlier in our AI automated Scope 3 calculation, we can generate an assessment of all suppliers by leveraging accounting data. This way, we ensure that all suppliers are covered in the assessment. This is reflected by the high data quality scoring for activity data, indicating that we have a high coverage. Hence, we can resolve the first audit issue. Second, the auditor recommends improving the data quality scoring of the carbon assessment. The initial assessment with accounting data is exhaustive, but spend-based emission factors can be inaccurate due to pricing, inflation, or exchange rate effects. Hence, the data quality scoring is low after the initial assessment. This is expected and can be easily mitigated by using the integrated supplier interaction functionality of the carbon module. Our supplier assessment allows you to identify the suppliers which create the most emissions in your supply chain, and then request further data from them to improve your own data quality as well as accuracy of your assessment. The supplier can either provide the data quality in the contact form or use the carbon module to generate the relevant information. If the supplier already uses the carbon module, you can request that information and the information is automatically reflected in your calculation. All right, so let's summarize today's presentation. ESG, especially in environmental management, has a high urgency due to recent and upcoming regulations in the EU and the US. At the same time, ESG needs to be treated holistically in the context of broader risk and compliance management, and Łukasz will now share how AdaptiveGRC supports that.
AdaptiveGRC, a new ESG module, provides all the functionality required for compliant reporting and auditing, all embedded in the existing GRC platform. To enable compliant environmental reporting, AdaptiveGRC has partnered with Forward Earth, a provider of integrated environmental management software. How does the partnership between AdaptiveGRC and Forward Earth value for our customers? Please explain, Micha.
With our combined solution, we address urgent pain points such as performing carbon calculations, collecting and generating the environmental data required for ESG reporting, reconciling all calculations, analyzing environmental impacts, as well as identifying areas for improvement.
Furthermore, we provide a holistic view for all critical GRC and ESG processes. Also, we ensure auditability of all relevant GRC activities. So, our combined solution is now available from AdaptiveGRC. So, we are coming to the end of today's webinar. Thank you very much for your participation, and thanks to our guest and partner, Micha from Forward Earth.
Thank you very much, Łukasz, for inviting me, and thanks to all the participants. Have a great day.